This episode is sponsored by City Traders Imperium. CTI is a prop trading firm looking for profitable Forex traders who need more capital. CTI will back its traders up to $2 million, which is the most in the industry, and thousands of traders worldwide are trading their capital remotely from their own home. It's the most flexible funding provider in the industry, where any strategy is welcome and overnight or weekend positions are allowed. Plus, CTI doubles your account every time you hit 10% net gain, which you can scale up to $2 million. Click the link in the description to find out why City Trader offer the best funded trader program in the industry, or visit citytradersimperium.com. All right, folks, here we are on Trading That YouTube channel. We've got Jacob with us, who is the Trader versus Trader champion, the first ever Trader versus Trader champion. We've got him here to walk through a little explanation on how the big banks move the markets. Okay, he's only 15, he's from Sweden, so we're not going to see his picture here. I'll put something else up instead. So Jacob, over to you.
All right. So basically, the best advice for me is just, I don't like to trade with the trend. Or when it is a downtrend, I'll try to buy, because we have a lot of liquidities in the tops and the banks are lost. No, the banks are on loss. So let's see right here. We had liquidities right here, people's stop losses, and the banks are on loss. What do the banks need to do? Move the market up to get a profit on these entries. On these entries right here, these C1, C2, so-called the level 1 and level 2. So they need to get in profit on these ones there. What is the best thing to do? Move the market up again. And that's why I always try to look for buys in the downtrend to trade with the banks. So let's say right here we had here we had a clear liquidity right here. Let me just here we had a clear liquidity.
And do you want to explain how you see that liquidity?
Oh yeah, liquidity is basically just double tops and double tops. Let me this one, so basically double tops. That's liquidity. And double bottoms is liquidity. All right, so that's liquidity right here. So we, as you guys can see, if you go down to the small time frame, you can see that this is liquidity. If you go down to like 5-minute time frame, you can see that this is liquidity. This, you have huge double tops, and if the market goes down, we see liquidity right here. Wait, let me just get the money box. We see liquidity down here. If the market goes above the liquidity, that means that it's not liquidity, like the liquidity got cleared. So if the market goes up again, then that means this is not liquid. I mean, the liquidity got cleared, so it hit people's stop losses. So right here, as you guys can see, clear. It doesn't mean that they can just be double top. It can be triple top, like just a resistance here. As you guys can see, we have a clear liquidity. So the retail traders are in profit on this one. You're in profit, and the banks are on loss. What do the banks need to do? Shift the market up again. So we had a lot of liquidity here as well. A lot of liquidity in the top. A lot of liquidity is in the top. So we have basically a lot of double tops right here. So in a downtrend, you always want to see a double tops. And then uptrend, you're also trying to see double bottoms. And you're going to take an entry that you feel comfortable and shift the market down again to trade with the banks. So here, I knew that the bank's going to buy. Why? Somewhere around here, the banks are buying to clear the liquidities, to get in profit on these trades, get in profit on these double tops. Because the banks, let's say, all right, we have a double top. All right, we have a double top. Then when the market comes down, they buy. The retail traders are selling right here, and the banks are buying right here. All right. So they have enough money to shift the market up. But in this situation, they didn't. So the retail traders make profit. They never close their trade at. Most of the time, they never close their trade at loss. So the market goes down. They don't close their trade. They are in millions drawdown. They're on drawdown. So what do the banks need to do? Shift the market up to get in profit again. To get in profit on this, because they buy it right here. They are buying. So yeah, that's what I think the market will do. So we have liquidity here, as I said. Banks are buying right here. Retail traders are selling right here, right? So the retail traders are selling right here, and the banks are buying right here. So they didn't close their trade. They're on drawdown. Then they're buying to shift the market up so they can get in profit again. So that's what I think the market will do in a couple of days.
How do you know that the banks are buying at those points?
I don't know when they're buying, but I use the Wyckoff strategy, and the and the liquidity box. I want to see a Wyckoff strategy forming, and plus the smart money concept. Then I take entry, buy. Then I know the banks trying to shift the market up again.
Right, guys, just jumping in here quickly, I wanted to see what actually happened with the chart. So we recorded the interview in the live market, and this is what happened. You're going to see, I'll put it into replay mode. So this is the line he was targeting right at the top here. So we're down here, he was targeting this line. This is what happened, okay? So let me hit play. You're going to see it move down a little bit there. But then what strangely happens, it shoots right back up, almost touches his line. So that's as high as it gets. He was about, let's have a look, he was about 10 pips away, 11 pips away, maybe 12 from the line in terms of way down here. And how many pip move was that? So let's just say it was around about here, and he always trades with a bit of a wide stop. So it went 197 pips, okay? And that was assuming he would have gotten there, but I think he even gotten down here somewhere. Anyway, this stuff works. That's the main thing. This stuff works. So let's finish up the video, and it saves you going and doing this later on, okay? All right, let's do it. Cool. Well, look, guys, I think that's a fantastic explanation. I've learned a thing or two here. Remember, Jacob's only 15, so this guy is... Go and listen to the podcast we shot, because the podcast really explains how he got to where he got to in literally just 2020, okay? So did it in less than 1 year. And he's shown us on the Trading View replay challenges that we did, Trader versus Trader, where he took out some really good traders, multiple funded account holders. Yeah, he's done really well. So look, Jacob, before we wrap up, what's the best way for the guys to get hold of you?
Instagram and Telegram. Instagram and Telegram, GWRFX_27.
Cool. Well, look, folks, thank you for watching this. Hopefully you learned a thing or two. Guys, go and check them out if you want to learn more. Go and check out the Trader versus Trader videos that are up there on tradingnut.com as well. And do remember to subscribe to this video, because you're going to get more like this in the future. And also hit the like button and hit the notifications bell as well. Click all so you don't miss these videos coming out in the future. All right, we'll see you in the next one.